Nifty continues its journey in green, hovers above 21,700, Sensex over 72,300 points.
Hudco rallies in trade. The stock is up over 18% on the back of the signing of an MOU with the government of Gujarat for 14,500 crore.
Zomato down almost 3% after GST demand notice for 401 crore rupees.
Dense fog expected to continue in the northwest and parts of central India. 22 trains are running late and 134 flights are delayed in Delhi.
Hello and welcome. You're watching Market IQ, a show where we'll get you all the national, international and market news at noon. I'm Smriti Chaudhary and with me is Mathew. We'll dive into the news and updates quickly, but before that, let's take a look at the markets. How are markets faring, Alex?
Well, it's looking good and it's looking like it's going to be a good end to the year, Smriti. In fact, this is the last monthly expiry of 2023 and we are trading at very close to the high point of the day for the benchmark Nifty 50, and that means that we are trading at all-time highs. 21,756 on the screen, and remember, October 26th of this year was when we hit the most recent low where the Nifty 50 touched 18,800, and the gain from that point has been as much as 15.6% in the span of just about 2 months. What a gain it has been. And the broader markets more or less keeping pace. You have the mid-cap index that's gaining about 1/3%, and you have the small-cap index that's up about 0.5% at this juncture. Let's very quickly take you through the market breadth as well. For a large part of today's session, you've seen more or less even Stevens, and in fact that continues to be the case as well. Let's look at the key contributors to the Nifty 50's move today, about 0.5% higher, and this should kind of give you a perspective of what really is contributing. Right on the top, you have HDFC Bank, the sector heavyweight, and indeed the heavyweight on the benchmark as well, contributing the most. You also have Reliance Industries. So cumulatively, about 20% of the benchmark is leading to quite a bit of the gains today. NTPC and Coal India, as well as Nestle, also gaining ground. Among the losers, you have Infosys, which is dropping the most, followed by Ultratech, Asian Paints and Maruti Suzuki. Now, in terms of sectors, let's very quickly take you through the big movers. Of course, most of the sectors are trading in the green today. You just have one sector in the red, and that is the Nifty Media Index. Among the top performers, you have oil and gas that is moving. Of course, crude oil has been in focus. It has moved up just a tad bit on concerns of an increase in the consumption, and of course there's a question mark about whether or not it will slip from this point. There is the inventory data in the US that will come out later today that will likely give the next cue. Among the others, you have PSU banks as well as metals that are outperforming in trade today. Smriti.
Right. It'll be interesting to see how we close this year. We've been winning or gaining in the last 8 sessions, so it'll definitely be interesting if we close with this streak or not.
Yeah.
But last couple of hours of trade today and tomorrow. But moving on, let's focus on one stock, which is Suson Energy. It's up about 3% right now and has been in focus today since morning. Now, this the increase or the gains are on the back of an order win. Vikas Srivastav is joining us with more details on this. Vikas, what does the order win mean for the company? And if you can tell us about how big this order is for Suson.
Yeah, right, Smriti. So as you see, today's order win is just an addition to the couple of orders that they have been winning in the last few days. And if you look at the entire this financial year for 9 months, they have already bagged close to 1,000 megawatt of orders of wind turbines. So what is contributing mostly is like the company has turned around in the last 1 year. Their net worth has turned positive, so that sentiment has turned positive for Suson, which was not the case a year back. Also, what's happening is that the government has shifted its focus on RTC-based projects. So what that means is now a lot of hybrid projects will be happening, which includes wind as well, wind projects. So earlier the focus was more on solar. So now with RTC, the focus has once again shifted on wind projects. So the company is getting a lot of projects in the wind segment. Apart from that, what government has done is that they have made repowering of all those projects which had wind turbines of less than 2 megawatt. So what will happen is that all the old projects where the wind turbines of lower than 2 megawatt turbines are there, they will need to be repowered to above 2 megawatt and 3 megawatt projects. So that's complementing the demand. As well as if you see, the company is also benefiting from its market share. They already have a 30% market share as far as manufacturing is concerned. So all the incremental demand which is coming up in the market, they are the ones who are meeting up this demand. Gamesa and Siemens recently, their wind turbines had technical issues. So that demand is also shifting, what analysts have told me, to Suzlon.
Fair point. Thanks so much, Vikas, for bringing us those details. Suzlon, arguably one of the stocks of the year, has gained over 250% at this juncture. What a year it has been. Now, we will talk about multi-baggers in just a bit, but let's talk about a stock that is outperforming in trade today, and that is Hudco. It is a stock that is up close to 20% at this juncture, and that's on the back of MOUs that have been signed with the Gujarat government to the tune of 14,500 crore rupees. This is, remember, ahead of the vibrant Gujarat Global Summit of 2024. It is a statement of intent. It must be said that not always do MOUs of this nature get converted into actual investment and disbursements on the ground. But just to give you some perspective on Hudco, you have the H1 performance where the reported disbursements stood at 3,723 crore rupees. That compares with 719 crore rupees from the previous comparable period. And you have sanctioned loans which stood at about 7,800 odd crore rupees, and that compares with over 17,400. The stock is up over 100% in the year-to-date period, or rather in the past 6 months, and in fact over the last year it has gained about 115%. In fact, it is more than that level based on today's move of 19%.
Well, on that note, let's talk about the multi-baggers for this year. And we have Mahima joining us. Mahima, tell us what sectors dominated this year and how many stocks were multi-baggers in 2023?
Right, Smriti. So clearly this year has been a great year for the markets, and we have a large list of multi-baggers, a few of which I'll be covering. If you see from the Nifty 500, 48 stocks approximately were multi-baggers. From mid-cap, we see 12 stocks that converted to be multi-baggers. And from the small cap sector, we have 32 stocks that were converted as multi-baggers. Now, if we talk about individual stocks, to be specific, in the large cap sector, we had Zomato and HAR. With Zomato, if we see, has clearly had a very bad year in 2022. However, in 23, if you see, the stock has been up 2 times, and this is because Q1 FY24 had declared its first profits, and these profits continued in Q2 as well. Now, if we talk about Hindustan Aeronautics, it has clearly been a high flyer for this year, and the stock has been up 2.4 times, and this is on the back of a strong order book that they have, and they've had a very good execution this year. Coming to mid-cap sector, the mid-cap stocks, the mid-cap multi-baggers that we had this year were PFC and REC, which are from the power sector. The power stocks have had an uptrend this year, and for PFC and REC, we've seen a robust loan growth, and their entire loan book size has been at a much larger size. So that is what was driving the growth of this stock. Then talking about small cap sector, we had multiple stocks, out of which BSE Limited literally stood out. It had a very strong growth. However, we are yet to see that how this stock will grow in the next coming year. Then we also had Suson Energy, where Vikas just talked about it. Suson Energy has had a very strong order book, and it is also added to the MSCI index this year, which is why the stock has had a very good uptrend. And then we also have Apar Industries, where Apar Industries has had a very strong financial year, with the profits nearly doubled in Q2 FY24. And lastly, we have a pack of railway stocks. It's interesting to note note here that railway stocks, almost all the stocks in the railway segment are multi-baggers for this year, and this is because the government is working really hard to revamp the Indian railways. Recently, the railway minister also announced that they will be allocating 1 lakh crores to buy new trains in the next 4 to 5 years. So these are some stocks that really stood out in this year out of all the large list of multi-baggers list that we had.
Thanks so much for bringing us those details, Mahima. Let's talk about the latest updates on the weather front. And we've seen a dense layer of smog in Delhi, which has led to delays in several flights. Our colleague Vinay Kulbe is joining in to tell us more about how things stand right now. Vinay, not looking very good, very literally. I think visibility is compromised in several parts of the city. What can you tell us about the latest?
Yeah, so the dense cover of fog has affected the visibility a bit too much, because if we see at Delhi airport, over 130 domestic and international flights has been delayed, and many of those flights have also been cancelled due to this smog. And this is particularly due to the visibility issue. Delhi airport itself has said that non-Cat 3 compliant flights may get affected. So Cat 3 is a combination of systems that allows safe landings in adverse weather conditions. So Delhi airport has said that the flights that do not comply with these norms will not be allowed to land at Delhi airport. So these challenges are also coming during peak travel season. And we know that during Christmas and New Year, the travel peaks in domestic market. So that is also becoming a bit of a problem for the airports as well. So if we see at the daily air passenger traffic, it is hovering around the 4.3, 4.4 lakh mark, which is much higher than the 4.2 lakh mark, which was seen last year. However, the situation has improved a bit if you compare it with the last 2 days, because yesterday there was a very dense fog and it affected flights much more. So today at Delhi airport, the Cat 3 norms were lifted after 9 a.m., while it was there at 10 and 11 a.m. as well yesterday.
All right. Thank you, Vinay, for that update. Let's shift focus to the primary markets for now. We've seen a lot of IPO frenzy this year in 2023, and in this calendar year, we have seen 58 main board IPOs and 176 issuances in small and medium enterprises as well. Now, online retailer Brain Solutions, the parent of Firstcry, has also filed for an initial public offering with market regulator SEBI on Thursday. To tell us more, we have Rishabh Bhatnagar joining us. Over to you, Rishabh. Tell us a little bit about what kind of money is Firstcry's subsidiary looking to raise.
That's right, Smriti. The flurry of IPOs towards the end of the year is continuing. We're seeing another new age stock filing its DRHP with the SEBI today. Firstcry has done it today. It is going to be a combination of a fresh issue and an offer for sale. The fresh issue is worth around 1,800 crores, and the OFS segment, they plan to sell about 5.44 crore shares. Among the leading existing shareholders that are selling their stake are SoftBank. SoftBank is selling about 2 crore shares. That's the largest shareholder here. Apart from that, there's Mahindra & Mahindra Limited, the listed company. They're also selling about 28 lakh shares. We have TPG Growth, Premji Invest, and NewQuest Asia that are also selling shares. Apart from this, the company is also planning to consider a pre-IPO placement of about 360 crore rupees. And mostly it'll be using these funds for expansion, mostly in India, and also they've mentioned in their DRHP that they'll be expanding to Saudi Arabia using these funds. We also have a look at their financials for the first quarter of FY24. It continues to be a loss-making company. They've posted a revenue of about 1,400 crores for the first quarter with a loss of about 110 crores. So yes, another loss-making company that is heading to the bosses. To be noted here is also the fact that they were profitable in FY21.
Okay, fair point. Thanks so much, Rishabh, for bringing us those details, and one to watch certainly in the primary markets. Now, we spoke with the management of Gensol Engineering today on NDTV Profit, and Anmol Singh Jaggi, the managing director of the company, spoke about the company's revenue guidance going forward, and here's what he had to say.
In FY26, when we take the plant to full production capacity, that is the time when we can see that we will have a revenue of about between 1600 and 1800 crore rupees on the EV manufacturing. And that time we can easily expect a 15% EBITDA to flow down from the EV manufacturing, which would mean that on a revenue of about 1600 crores, we could see about close to 250 odd crores of EBITDA coming in from the EV manufacturing business in FY26.
We'll slip into a short break now, but more news and updates on the other side. Stay tuned.
Welcome back. You're watching Market IQ. Let's talk about DAM Capital, which has initiated coverage on five-star business finance with a buy rating. Himansh is here to tell you about what the target price is, what the potential upside is, and what the rationale is for that buy rating. Himansh, take it away.
Thanks, Alex. So DAM Capital has initiated its coverage on five-star business. To give you some context, it's a small finance lender, essentially lending to small businesses and self-employed individuals across tier 3 to tier 6 cities. And the stock is up after the buy rating that was assigned to this counter with a target price of 1,000, implying a 44% upside as of yesterday's close. Now, what are really the key strengths that this brokerage has been citing here is firstly limited to negligible competition given the high entry barriers, the inability for the companies in this segment to take advantage of the SARFAESI Act, for example, makes it increasingly complex for them to capitalize on a segment that is seen somewhat risky, given and you also have the tightening on the unsecured loans that have been coming in, but that have created that kind of sentiment around it. The brokerage also expects to see some inching up in productivity by 25% in the coming years. The debt to burden ratio is at a very healthy about 50% or less compared to the long-term average of 38%. They are also seeing potential for current management to possibly deliver fairly foreseeable future growth as well. So management is a plus. Lastly, ROAs would come off and the business has potential for re-rating. So those are really the key factors.
Got it. Thank you so much, Himansh, for that. We'll move on to the macro a little bit. In 2023, India stood out among its global peers for its resilient growth. Will this trend sustain or will there be a slowdown in this growth? To tell us more about this, we have Pallavi Nahata joining us. Pallavi, what does IMF's forecast say about India's growth in 2024?
Hi Smriti, so you're right, 2023 has been a great year for India. In fact, I remember after the Q2 release, we had some time back, a research note had read, India looking like a wow. And possibly the most viral line of the year also appears to sum up the sentiment around the Indian economy so perfectly. And this is, mind you, despite ongoing geopolitical skirmishes, despite high inflation or bouts of high food inflation that we saw domestically, it's also despite wars, weaker global growth, and a higher interest rate scenario, right? India's GDP, despite all of that, grew at an impressive 7.7%. That was in the first half of the ongoing fiscal year. And because of better than expected growth, that's also pushed up forecasts for the full year. Momentum in economic activity has held up in this quarter, boosted by festive demand. For the full year as well, India's GDP is now projected to grow at a solid 7%. Now that's according to the central bank, and that's a revision from 6.5% that the central bank had previously forecasted. Q3 is projected to grow at 6.5% and Q4 at 6%. So despite some slowdown compared to the first half, without doubt, momentum in growth remains. A quick sentiment analysis we ran also indicated that this is the feeling not just by local institutions, but it's something being mirrored in global commentary for India as well. So for instance, the IMF projects growth in India to remain strong. It projects GDP to grow by 6.3% in both FY24 and the next fiscal year, that's FY25. And the projection for FY24 by the IMF has also seen a little bit of an upward revision because of stronger than expected consumption. And the World Bank had actually trimmed the forecast for GDP growth to 6.3%, but let's remember that this was a forecast that was made in June and is quite likely to see a revision in January. Also now moving to what global rating agencies have to say for India, Fitch Ratings not too long back actually raised India's medium-term potential growth. It was increased by 0.7 percentage points to 6.2%, and for the ongoing fiscal, growth is projected at 6.9% by Fitch and 6.4% by S&P. S&P also expects India to be the third largest economy by 2030. What's the key question now is whether these trends that we have seen this year can sustain into the next year. And if the RBI's commentary is anything to go by, that does appear to be the case. That's what the central bank does believe. In its latest bulletin, it said that the broad-based strengthening of economic activity that is underway will likely be sustained, aided by easing input costs and corporate profitability. We've been watching out inflation fairly closely, and that too is expected to ease to 4.6% in the first 3 quarters of FY25, and that's expected to bring further relief.
All right, thanks so much, Pallavi, for bringing us those details. And in fact, I think if anybody is watching this very closely, it is the FMCG players and those that are focused on the rural economy to see whether or not those question marks about growth in the rural economy are answered at the start of the new year. Let's also talk about the banking space, and there is an update from the central bank about the latest trends in asset quality in its latest report. We've got Mimantsa joining in to talk about that. Mimantsa, it's looking like a good picture for the banking sector as a whole, with asset quality improving across the board, right?
Is that the asset quality of Indian banks has improved in the first half of FY24. So by March 2023, the GNPA ratio of scheduled commercial banks stood at 3.9%, which was a decadal low. By September 30th, the RBI has noted that the GNPA ratio has fallen further, which means the asset quality has improved, and the GNPA ratio has fallen further to 3.2%. All the bank groups have also met RBI's capital adequacy requirement, which stands at at 9% for scheduled commercial banks. But what we are seeing is that the capital adequacy ratio is much above the RBI's mandate and stands at 16.8%. So even the balance sheet of banks is expanding at an accelerated pace, with the driven by the credit to retail and services sector. The RBI has also reiterated the strong interconnectedness between banks and NBFCs, which needs to be closely monitored, because NBFCs usually have an exposure to multiple banks simultaneously, and they rely on banks for their funding. So the RBI has time and again warned against such concentrated linkages which may create a contagion risk. Another key takeaway from the report is that the number of bank frauds reported in April to September this year have more than doubled year on year, but the value of these frauds that are reported in the first half of 2024 have fallen by 85% to rupees 2,642 crore rupees year on year. So most complaints filed this year were related to card and internet related frauds. Then there's some commentary on payments banks as well. Payment banks have turned profitable for the first time in FY23, which is the first time since inception. So even the key profitability indicators like return on asset, return on equity, and net interest margins have shown a positive trend in FY23.
Got it. Thank you so much, Mimantsa, for that. And that's all the time we have on this edition of Market IQ. But before we head into the break, here's what Rajya Sabha MP Shashi Tharoor had to say about his retirement plans.
Look, I do believe that at some point the time comes to make room for younger people, and that's my thinking. Now, as you know, in politics there is another slogan which is never say never, and I seem to have violated that. I didn't say never. I said I think it will be my last election. In any case, if I am going to contest, I'll contest it in the spirit of it being my last election and doing my very best for the people.